Good day, everyone. Thank you for joining the call today for Japan Display's March 2022 Q3 earnings. My name is Kumi Higuchi from Japan Display's Sustainability Department, and I am a contact window for investors and analysts. Please feel free to contact me anytime. Today's speakers are Scott Callon, our Chairman and CEO, and Akihito Okochi, our Chief Financial Officer. Now, Scott will start the presentation with an overview of the third quarter. Scott-san, please.
Everybody, thank you for joining. The presentation is meant to be self-explanatory, so I will touch on what I think are current or the key topics, and please forgive me for jumping through areas that I think we can spend less time on. So to give a backdrop, continues to be a very tough operating environment because of the ongoing kind of tension and tightness in the global supply chain. So our Q3 sales came in below forecast on chip shortage impacts. Nonetheless, earnings came in substantially above forecast on everything we're doing to try to get the profitability as soon as possible. So in a sense, it was a very strong quarter, particularly because of the progress we made, which is the third bullet point on the page, which is really the most important in terms of driving our value as a company going forward. Is we've made huge progress on both front plane and back plane technology. And without going into too many technical details, the front plane is the substance that the material that converts electrical signals to light. So that would be things like OLED and LCD. The back plane is the array that sends the signals and distributes signals to the pixels on the front plane. And so examples of technology in that space would be things like amorphous silicon, oxides, LTPS. And so they are separate, and you can mix and match them. And one of the things that we think we haven't done right as a firm is we haven't pushed as hard on driving forward technology development in both areas. You know, we continue to lead the world in ultra high resolution LCD technology. We have world class, and that rank, you know, so just really three of us, Samsung, LG, LG Display, and JDI, in terms of our OLED technology. But to be absolutely overwhelmingly dominantly number one in the world, like we are in high-end LCD, is we think a project that's worthwhile. So to drive technology forward, so you get higher speeds, you get lower power consumption, and you know, higher resolution. Those are worthy projects in order to make kind of the world a better place and make people's lives better. So there will be some announcements that will be coming from us. It does raise, because we have had just huge success both on the front plane and on the back plane. It does raise some issues as to how we want to handle this. The front plane investments particularly are going to be, and this is to be clear, we have talked about it before, although not in detail, and apologies, we're not going to do it in detail today, but we have leading edge next generation OLED technology, which either doubles brightness or halves power consumption, is also extremely low cost to produce. How we exploit this technology, whether or not we should do the investments ourselves, and so, you know, with a big investment pull into the firm with really high profits going forward, or whether or not we should go through a business model with more of alliances and licensing. These are very important decisions we're going to have to make as a firm. The good news is we're in a position to be able to make them, both on the front plane and the back plane side. Is a technology development which is also extraordinarily important, and it'll be far less costly. So we're going to have to make a business model decision in the next 3 to 6 months as to how we're going to roll out these technologies into the world. But these technologies are coming to the world from JDI. 4 other points on the page, but I think I've probably spoken as much as I should. We'll run forward. Turning to the market environment, as I said earlier, you know, it's just really hard out there. This, you know, if something goes wrong anywhere in a very, very tight supply chain and tight linked supply chain, it kind of rebounds. So, for example, recently there was flooding in Malaysia, and it's like, oh my gosh, another key factory with a supply input to us has gone down. So it's been very, very difficult to work through and continues to be. I mean, at this point, our primary problem in terms of it is primarily semiconductors, and the impact on us is not us. It's actually our customers, other suppliers, which is to say we have done everything we can and successfully to build substantial robustness into our own supply chain so that we're ready to ship. And increasingly, we're running into issues where, unfortunately, other suppliers to our key customers are not ready to ship, that they're experiencing supply chain issues, and therefore our customers say, we can't take product from you because we can't get the parts we need from elsewhere. So it's still really, really hard out there. And it's something that we're continuing to work through as an industry. To point to the changes in terms of the market environment from the last time, 3 months ago, there's some softness that has emerged in mobile China. So shipping into our smartphone customers in China, they're having chip shortage impacts. They're making decisions to do some customer inventory adjustments. So that's a negative over the last 3 months. On the positive side, automotive, despite all the huge challenges, and they truly are huge. With a car, you've got thousands of parts. There's so much more complex. There's so many things that can go wrong in the supply chain. It's really, really hard out there for our customers and for our partners in trying to get cars built. Having said that, there still is very, very robust demand. We are taking share. We are growing volume. So this is a growth area for us. And so we've upgraded kind of our forecast. As you can see the little weather chart. It's a very Japanese thing to have these weather charts on the right side of the page. And I would point out that on non-mobile, this is primarily smartwatch OLED for us, and the metaverse, so VR, LCD displays is very strong. We are unfortunately chip constrained, particularly in VR. And so if we could get more product, we could ship more product. So that continues to be a major focus of the firm. It's worth pointing out that we are the only company in the world capable of shipping 1200 PPI or more. So the high-end, high-resolution displays that are necessary to try to give you something of a true unified experience between the real world and the virtual world. That is, and so in display technology, and so it's a very important area for us. Which is to say, we're winning new mandates. We're number one in the world in this technology. We're single source because no one else can build it, and so getting more parts and continue to develop our technology roadmap in this area is absolutely critical to the future. And we have a robust technology roadmap, and we're going to be pushing. We see visibility with our technology out to 2000 PPI in the next couple of years. And it's probably worth pointing out. Sorry, I'll skip some things and I'll go into the depth where I think it's important to share kind of the information. There is an approach to getting to high resolution, not using glass substrates. So everything I've talked about is glass. So we're building on glass at 1200 and shipping at 1200 PPI. We're the only company in the world capable of doing that. There is an approach to use silicon substrates. And the problem with silicon is it's incredibly expensive. I mean, literally over 10 times more expensive. And because you're using semiconductor equipment, the size of the displays you can build is just incredibly tiny. And so they're kind of a niche product. It's possible to be demand out there, and if there's demand, we have the capability of delivering against that demand in the silicon substrate space also. But the real battle, the real technology battle, is to deliver extraordinarily high resolution at extraordinarily low cost, and that requires a glass substrate. So it's a huge opportunity for the firm. It's a huge opportunity for us to serve the world. And it's a huge opportunity to participate in the metaverse revolution with JDI inside. Let me turn to the next few pages. These are just meant to kind of show in a simple way, what happened in the quarter relative to our forecast and relative to last year. So we're obviously doing much better. Much better is not enough. We need to get clearly to get to profitability. and we're making huge progress against that. So this shows what's happening to EBITDA. Next page will show what's happening with OP. Can we go to the next page? And then we jumped to net income. That's fine too. There was an extraordinary last year, and so net income came down and it's gone back up. Now we're at the full year forecast. Again, I'm showing substantial strength. It's tough out there, so hopefully I'm not complaining too much. But we are executing robustly against in a very difficult environment and outperforming. So this shows what's happened on full year EBITDA forecast, which we upgraded today. Next page will show the upgrade in full year OP. The next page will show the upgrade in full year net income. And as you can see, just huge changes. Turning to the strategy, and this is unchanged, but it's important to keep your word. So this is what we said we're going to do, and this is what we're doing. So the key KPIs on the strategic focus, which is to strengthen existing businesses and build new businesses. The first one KPI is to get the EBITDA positive by the fourth quarter of this year. As we can see today, we affirmed that and raised our forecast for the fourth quarter, and we expect to hit this target, which is a critical target. And the second one is to build new businesses. And we've done, and it was to build multiple businesses this year. I'm sorry, last year. So this was put out last year. So in 2021. And we have a number of initiatives underway, one of which we made public, and so I'm gonna touch on that next, which is our transparent display technology. But we've got a whole bunch of things so we met our goal of getting ourselves going. In terms of the other new businesses, we expect to come to market, at least one of them this year, and so we'll have disclosure about that as appropriate at that time, and possibly the second one will also come this year also. Let's turn to the next page, and I'll talk a little bit about what we're doing in the transparent display space. So it's worth pointing out, well, one, real clear, our transparent display technology is number one in the world in transparency. And if you take a look at the phrase "real clear" and look at it in the middle, you can see that at the very end it says "clear," and then if you flip it from the C in the middle and read backwards, it says "clear" twice. And I'll explain. That's actually rooted in the technology merits of the device. But we have begun. We're going to start shipping next week with a 12-inch display. We will then begin shipping this year a 20-inch display. But what's unique about our technology is two things. One, it's truly transparent. And so there are folks out there who are shipping transparent displays, and they're less transparent. I mean, which is to say, this is glass-like transparency. And in some cases, we have competitors who like they can ship, in a real case, 60% transparency, but only in black and white, 10% transparency if it's full color, and this is full color at 84%. So it's like glass. So there is a truly differentiated capability based on our material science to deliver true transparency. The second element, and this is links into the real clear, which is clear going both directions, is the competing technologies are one-way transparency. So you look through it and it's darker than ours, but yeah, it's transparent. But from the other side, since this is, for example, OLED technologies, it gets muddy and cloudy. So these are one truly kind of best thought of. The competitor offerings are truly best thought of as one-way transparency devices. And so we're delivering a brand new technology to the world with true transparency and multi-direction transparency. It's a really interesting and exciting technology. Next page. And so, we want to do something big with it. Some set of the market side, put on the bottom right side, which is our current kind of technology display as a device and what the market framing would look like for that. This is really only for a device, and we have ambitions to embed rich content on top of it. So, as a device only, and looking at kind of purely a transparent display segment with kind of the use cases that we at this point have imagined for it. We see a domestic market of about 40 billion yen and a global market of 600 billion yen, and at 100 yen to the dollar, so 6 billion yen would be $6 billion. And the market could be a lot bigger than this, which is to say, if we think we can kick out larger, non-transparent displays, because these are truly displays, they are displays. They also happen to be transparent. With the functionality of transparency, then the market size could be literally 5 times to 10 times bigger. But we think it's just a really spectacular, new, interesting, powerful technology. Until now, displays have been walls, not windows. And so we have truly window-like display technology. And we have a video for you, which will give you some sense of it. So let's see if we can launch the video. So this is our 12-inch product, which begins shipping next week. And again, we're going to do a much larger display soon. And we have customer orders for this. So this will be beginning, it's going to customers next week. As you can see, this is a genuine high resolution display. This would be an example of we just show some Japanese graphics to put on it.
Hello, I have a headache. Can I see a doctor?
好的，那请问你的头痛的症状是从什么时候开始的呢？
It started yesterday.
那请问除了头痛之外，还有其他不舒服的地方吗？
I feel very tired.
好的，那请你帮我填一下你的个人资料哦。
Okay, thank you.
So I think we can stop it here, but this is an example of one use case where we're doing real-time translation using not only the display technology, of course, but real-time translation technology. So we have a woman speaking in Chinese being translated into English, and then the person opposite, the gentleman, is speaking English being translated into Chinese. So that would be an example of a use case for the technology. And we've also, for the deaf and hard of hearing, this is really, really interesting. So we'll see how big we can build it. We're glad and proud to be bringing it into the world. That's what I have in terms of the overview of how the quarter has gone and what we're up to. I'll now turn to our CFO, Okochi-san, to give you the details on the financials.
Thank you, Scott. So I explain the financials by 4 slides. Next slide, please. Yeah, so this shows the financial results summary. Please see blue highlights in the table above. Left shows the actual Q3 accounting period from October to December. Right side shows the actual of 9 months. The table shows below shows the actual numbers, assuming excluding semiconductor shortage impact. Q3 3-month sales is 71.7 billion, and year-on-year base shows the numbers are almost the same. And you see the EBITDA, operating profit, and ordinary profit are improved significantly, as Scott explained earlier. Sales for automotive, mobile, and mobile for Chinese customers were good, and these covered the demand decrease impact of the mobile for US and Euro customers. The quarter sales have been continuously declining year-on-year basis for a long time, but such trend ended in Q3, and the sales will increase. The sales increase will be expected onward. I'll explain the details about the sales by product categories later on. As for P&L, product mix and cost reduction and price increase significantly reduced all the loss of EBITDA and operating profit and ordinary profit. Net income was 2.4 billion positive, mainly due to the gain on sale of KOE stocks. Excluding semiconductor shortage, EBITDA, both for 3 months and 9 months, were positive. I'll explain about the details of operating profit later on. We passed on the increased cost of the materials to selling price. Also, we had cost cut more than we planned. Then comparing to the outlook with which we announced on November 12th last year, EBITDA improved 1.1 billion and the operating profit improved 0.9 billion, and also net income improved 8.1 billion. As we explained previously, our P&L is surely improving, and we are on the track to achieve our Q4 EBITDA profitable target. Next slide, I'll explain the sales by product category. Yes. Categories are the same as before: mobile, automotive, non-mobile, such as wearable OLED for watch and VR, and so on. On the left side, we show the comparison of Q3 sales with the breakout of the product categories between last year and this year. Mobile is divided into the US, EU, and China others. As I explained previously, mobile for US and EU used to be over 50%, but has decreased by 20%. The actual amount is 14.2 billion in Q3. And we achieved to diversify our business portfolio. As for mobile, I'm sorry. As for mobile, year-on-year basis decreased by 23%, and quarter-on-quarter decreased by 90%. As we have explained, this is since our main customer has shifted to OLED. Sales to China increased mainly due to the effect of price increase, while we were focused on profitability in this business. Comparing to the outlook as of November 12th last year, sales improved 0.9 billion. Automotive sales increased by 10% due to the strong demand, despite continued shortage in semiconductor and other materials in Q3. Impact of the insufficient procurement of materials for customers was greater than expected, and the outlook as of November 12th was not achieved. Non-mobile, OLED for wearable and ultra high resolution LCDs for VR were good, and year-on-year improved by 29% and quarter-on-quarter improved by 21%. Comparing to the November 12th outlook, sales improved 2.4 billion as we could manage the material shortage. Next, I'll explain about the operating profit change. On the left-hand side, year-on-year basis, and right-hand side is quarter-on-quarter basis. You see the sales were almost the same, thanks for passing on the increased cost of materials to selling price, and also weak yen, this 3.7 billion increase. And by reducing the costs, such as manufacturing fixed costs and SG&As, operating loss significantly improved from 8.7 billion to 3.1 billion. Right side, quarter-over-quarter, the sales were almost the same, and rising the electricity price caused increasement in manufacturing fixed costs, and that made 3.1 billion operating loss. Lastly, move on next please. Financial focus. Yes, blue highlights shows financial focus of Q4 and full year. you see the last focus as of November 12th on the third lines from the left. Comparing to the late focus, we revised sales 6 billion down. We reflected the Q3 results and also reflected the impact of production in Q4 due to the tight global supply chain, supply demand situation for semiconductors, and also the risk of a decrease in orders from the customers. On the other hand, we revised P&L upward. We reflected the improved results of Q3 and the accounting for license fees, which we announced amicable settlement with the Tenma Microelectronics dated January 21st. And we also reflected passing on the increased cost of materials to selling price, and also price increase for some products. We changed the foreign exchange rate from 112 yen to 140 yen against the US dollars for this financial focus. The annual impact of the 1 yen against US dollars improves approximately 2.2 billion for sales and 1 billion for operating profit. We announced EBITDA at 0.3 billion of Q4 at the last announcement. We revised to 1.1 billion this time, and we still keep our Q4 EBITDA profitable target. While we continuously being facing tough external environment like material shortage and rising electricity pricing and other external factors, as we've committed, we are making steady progress toward a profitable recovery and a profitable. I finished my presentation. Thank you for listening.
We are now starting the Q&A session. If you would like to ask a question, please press raise hand button, which you should be able to find on the bottom right of your screen. When I see you raising your hand, I will unmute your microphone. Any questions? Well, as there seem to be no questions, Scott has a closing comment. Scott, please.
Thank you, everybody. We're grateful for your time. It's a really tough time of the world. Hang in there. Be safe. We are running forward. There's a lot to be done, and these are our values and kind of what we need to deliver, which is personal tech for a better world. So look forward to speaking to you again soon. Thanks so much. Have a good day.
Thank you again, and have a nice day. Thank you very much.